If you're like me, then you shudder at the thought of having to file your taxes. As someone who grew up in an Indian household, I was never really taught how to do that. So I've decided to make things a little easier for you. Firstly, the tax year doesn't start from Jan. It starts from the financial year, which is April, and goes on till March. So for instance, last year's tax year would have been April 2020 to March 2021. Alright, so the things you'll have to declare and pay to the government depends on what you earn. They are generally your salaried income, income from other sources, investment interest, other business ventures you are part of. The main thing you'll have to focus on is your salaried earnings and your investments. No matter what job or industry you're a part of, it's important that you understand everything about your salary, what you're being paid and how it is distributed. As an employed person, you get a base salary with lots of components. Reach out to your HR department and get your salary breakup and tax slips. There will be components like basic, special allowance, HRA, and tax deductions. Tax deductions give you an idea of how much tax goes from your salary to the government. Okay, let's talk about which tax bracket you fall within. In India right now, there are two tax regimes, the old one and the new one. Go ahead and pause the previous screens and screenshot if you need to, because these are important. Depending on your income, there's a percentage of tax you will have to pay. For instance, if you make more than 10 lakhs annually, you'll have to pay 37,500 plus 15% on the amount that exceeds 7.5 lakhs in the new regime and 62,500 plus 20% on the amount that exceeds 7.5 lakhs in the old regime. Now the big question is, which regime is better? Which one can you save more tax on? And honestly, that's a case-to-case basis. But one important thing to note is while the new regime has a smaller percentage of tax for each bracket, it allows for much less deductions and exemptions. This is a big chunk of money that you can save. And with that, let's get into what deductions and exemptions you can claim. First thing you gotta look at is ATC. Think of ATC as one of your best friends when it comes to tax. It can take off as much as 1.5 lakhs from your income. The most popular way to do that is a PPF or a personal provident fund. When you open a PPF account, you need to deposit a minimum of 500 rupees and a maximum of 1.5 lakhs within the next tax year. Whatever you deposit there compounds, meaning that the interest builds not only on your first amount, but that amount plus the interest on it. You can keep adding to it till 1.5 lakhs and then keep it going for either 10 years or 15 years. It's one of the easiest and best ways to save on tax and also gives you a pretty healthy interest. Another method is fixed deposits. Although they're not as lucrative as they were a few years ago, they are steady investments. To get the tax saving benefits from this under ATC, you leave the investment amounts for at least 5 years. Just keep in mind that the interest you make, like most investments, is taxable. Mutual funds and ELSS, which are equity-linked saving schemes, are other popular options under ATC. They range from low risk, low profit to aggressive, which is high risk but high profit. A good perk is that the lock-in periods for these kinds of investments are quite low. Some allow you to remove a certain percentage at any time, while some are only lock-ins for as short as 3 years. Remember that any investment that you put under ATC, you can claim up to 1.5 lakhs as non-taxable income. There are other tax saving schemes under ATC, ATD and others. But if you're focusing on any of the three that I just mentioned, you're already on the right track. Apart from these, you can also present deductions and exemptions such as cash withdrawals, payments for certain goods and services, loans for housing, education and vehicles. For instance, for a housing loan, you're paying two components, the principal amount and the interest amount. The interest portion of the EMI paid for the year can be removed from your total income and claimed as a deduction for a maximum of 2 lakhs under Section 24. And finally, a major deduction that one can get is under HRA or house rent allowance. This is presented to your employers and then added while filing taxes. Basically, the government allows you to save a small percentage of the amount you pay on rent and use it while filing. So that reduces your overall tax amount in the end. Obviously, if you live in a house that you're not paying rent on, this may not apply to you. You can claim up to 50% through HRA if you live in the same city and up to 40% if you live in a different city. If your rent exceeds 1 lakh per year, you'll have to submit your PAN card, your landlord's PAN card and rent receipts to show the amounts. So, what's the final step? Once you've declared your investments, provided your rent receipts to your employer, calculated your various deductions, etc., your company will give you something called a Form 16. Apart from that, here are the other documents you'd have to collect while filing your taxes. So, we have Form 16, you have your rent receipts to avail of HRA, your pay slips, your investment declarations, and your bank statements. Look, taxes aren't as complicated as they seem, but they're not a walk in the park either. The best thing to do is check out websites like ClearTax and other investment platforms that allow you to gain financial freedom and, more importantly, financial education. Or do what I do. I just sit down with my accountant and ask him to explain where my money is going. what I'm spending on and what deductions are being made for me. It's really never too late to get some control over understanding your own finances. I hope you enjoyed this video because I really spent a lot of time trying to understand tax. But if you did, show us some love, like, share, comment, subscribe, go wild. And if you like these kinds of videos, subscribe to Nutshell, because we like breaking down complex subjects and giving you value for the things you want to know.